speaker. He is the lead independent director of two listed companies, Globe Telecom and Ayala Land Logistics Holdings Corporation, and an independent director of two listed firms, Ayala Land and the National Reinsurance Corporation of the Philippines. He is also chairman of Singapore Life, a director of Esquire Financing, the Cullinan Group, Technomarine Philippines, Seven Tall Trees Events Company, and Mobile Group Inc. He is a member of Brother Bo Sanchez Mastermind Group and is cited by many as one of the best leadership, business strategy, investments, marketing, and sales speakers in the country today. He is the author of two books, Trailblazing Success and Firing on All Cylinders, both certified national bestsellers. He is the president and CEO of Rampver Financials. So, friends, let's give it up for our very own Mr. Rex Mendoza.
It's our honor and privilege that you're part of this afternoon's event, and we're happy that you've given us the time. So, strategic investing during the pandemic and beyond. People are looking at, exactly where they are today, and as Imelda has mentioned, 7 months. So, where are we at, and where should we be, and what should we be doing? This is something that's been plastered all over the place. We've heard it in many ways said by a very good friend, Warren Buffett, right? In many of the quotes, you will hear him say or read him that he said, be greedy when others are fearful and be fearful when others are greedy. Invest when no one's investing. Here, he said that the future is never clear. We like to be a little bit original in our posts. So we actually pin down something that's not yet widely used. He said, you pay a very high price in the stock market when there is a cheery consensus. Uncertainty is actually the friend of a buyer of long-term values. So what is he saying? It would be at times like this when great opportunities abound. And that's the truth. When we say strategic investing during the pandemic and beyond, it doesn't have to even be the pandemic. It can be beyond or even before the pandemic. So for us, ladies and gentlemen, we try to focus on real, strategic, and very importantly, intelligent investing. And why do I say that? Why do I say that? Because there are storms. There are storms. And a tree that has very strong roots laughs at storms. It can weather the storm. And when we look at this metaphor for investing, it is really how we see the storm in the way the world projects an investment marketplace. It's a VUCA world. Have you ever heard about that? VUCA world. A world of volatility, uncertainty, complexity, and finally, this is a new thing, ambiguity. I think we're very exposed to the first three, but ambiguity, yes, it's almost like things that are happening in the world today are unprecedented. It's always new. There is no template. We haven't seen it in the past. Check this pandemic out. Unless you were alive in 1912, you wouldn't know how to deal with this because we weren't there when it last happened. So it's a very ambiguous world. So we have to have strong roots. If we're going to be good at investing, if we're going to be doing strategic investing, then we have to have good roots. We have to be able to deal with the VUCA world that we see today. It's always a tug of war between growth and risk. That will always be a trade-off. Unfortunately, and I think all of you friends can identify with me, when times happen, when the shit hits the fan, people run away, people hide, people go into what they call flight to safety. When times are going well, that's the time frame they go for growth. And it's almost like Warren Buffett is correct, right? I mean, doesn't exactly match. It should be the other way around. But again, I think it's a play on the emotions. It's a play on what we feel. But essentially, if you're going to be looking at drilling down to that emotion and feeling, it's a bit ironic. Now, that's the reason why, I'm going to engage with all of you, and all of you will have to answer, ladies and gentlemen. We're going to be using polls here. Okay? Polls. Eric, please post our first poll. All of you out there listening to me, how many of you think that the next 12 months will be better for you? Life will be better 12 months from now. Okay? Those of you who say yes, just click yes. Those of you who say no, just click no. In 30 seconds, we're going to know from Eric what the results are. Okay? And I'm not going to tell you what the results are when it comes to the major surveys on consumer trends done by Kantar and Nielsen. So, can we have the results, Eric? How do wow, look at that. 91% say life will be better 12 months from now. 9% say no. Can you imagine that? I mean, Pinoy nga talaga tayo. Talagang sobrang Pinoy tayo. And you know why? I'll tell you this. All of those consumer trends surveys that have been done at a very high level say that the Filipino is really optimistic. That's our nature. We always look at the future with a sense of positivity. So 12 months from now, life should be better. Well, how come we're not investing well? How come we're not drilling on that? I mean, that's my problem. If you think life is going to be better, then we should be taking positions now, right? There is still low consumer and business confidence. That's a given. But let me tell you this. What's top of mind is not just health and security. The financial position of people is also top of mind. Isn't that surprising? People think about their financial situation at par with the way they think about health and security. Wow. Because there are two spectrums here. One side, people thinking, where will the next meal come from? Will the government help? Where will I get the money? I lost a job. On the other side, and most of you are here, this is where you are. You've started to work on a kitty. You've invested quite a bit. You've grown something. And what you're thinking of is this. How can I protect this? How can I preserve value as we're moving forward? So I don't want to lose what I've worked for. I don't want to lose all those hard work and difficult times just to build up this base, just to build up this portfolio, only to find out it's going to be erased. So I'd want to know how I can protect it, or I want to know how I can still grow it. That's where we are. And that's where people become so worried, and the sense of confidence gets missed out. Financial confidence is an issue because many of us are still in denial. Question, if you want a perspective of empowerment, how should we think about this pandemic? We have to think about this pandemic can really get really longer. It can get really longer. How many of you thought it's gonna be until the end of the year? GCQ. In March, many of us thought 2 weeks. Some of us probably said, okay, max 2 months. It's been 7 months now. And they just said that GCQ will be until the end of the year. That's not a very empowering perspective. If you're in denial and you're still waiting for things to change or things to go back to normal, you will never do well. The key to this, friends, is to think, okay, this can last till the end of next year. Let me tell you a better, more empowering perspective. It can last until 2 years. Why not? If a vaccine comes out, well and good, we're going to be happy. But if it doesn't, we know how to thrive within the crisis. See, I think all of you know I have a very good friend, Brother Bo Sanchez. He made such an impact on me last weekend when he told me, Rex, we have to change our prayers. We have to change our prayers. Do not pray for God to stop the pandemic. Do not just pray for God to end the virus. Do not just pray to God just to have a vaccine. No. While we pray for all those, while we pray for protection, can we also insert this? Dear Lord, can you prosper me within this pandemic so I can prosper and help others? How's that? Help me prosper within this pandemic so that I can help and prosper others. So if the pandemic becomes longer, I'm prospering and I'm helping other people. I'm living and thriving within it. I'm not surviving only. I'm living and thriving in it. There are people from IMG here. Let me tell you, you guys are doing even better than before the pandemic. Amazing. Why? Because you're not waiting for the new normal to come, right? This is now your best normal. You're equipped to do this. That's why your investments continue. Your evangelization continues. That is key here. So if a vaccine comes, fine. We're going to be happy. We're going to be frolicking outside and enjoying it. But if it doesn't, we're going to be okay. We're going to be thriving. See, the ultimate objective of wealth management would be fulfilled lives and a sustainable legacy. We want to live life to the fullest, but we want to leave something substantial behind so that our families and generations after will remember us. That's the responsible and disciplined thing to do. But we sometimes forget that. We forget strategic investing. Strategic investing, big words here, would be an active, continuous discipline where investors' decisions are based on goals, risk tolerance, and future needs for funds or capital. Where does crisis ever get mentioned there? Where does a bad economy ever get mentioned there? It's not. It's not mentioned there. Why? Because in strategic investing, one of the goals is this: to negate the impact of the environment, the negative effect of the economy on our wealth management program. We even want to eliminate the effect. Obviously, we cannot do that totally, but we want to be able to navigate well and maybe do well no matter what. And there are different investments. Sometimes we focus on rapid growth when we're in accumulation stage. So we focus on capital appreciation, growth funds, equities, balance funds, even alpha funds. But, if you're getting close to retirement, you have to dial down on that risk. So people will now have to go towards a low-risk proposition towards wealth protection. But you can never do protection if you've not accumulated anything within your growth years. So this is a total comprehensive strategy. This is an intelligent way of managing your wealth and managing your money. The reason why Rampver Financials is very successful today with the kind of people we're helping is because we get people to really realize it's not the environment, it's your strategic management, it's your wealth management. You remember what the definition is of wealth management? That's our problem. How can you do something you cannot even define? Wealth management is a needs-based full-scale management that assists individuals and families in the accumulation, preservation, and transfer of wealth by customizing the right product solutions to meet goals and objectives. That's the definition. Now, if you're going to be looking at that definition, accumulation, preservation, transfer of wealth, are you doing the right things within the spaces of your life? That's the reason why we need educational platforms. That's the reason why we need communities. I still don't, subscribe to the fact that you do it individually. No. You do the correct things, you share it with family, your family supports you. Now, if you're part of a community that pushes the same attitude, then it's even better. You know why? Because they kind of pressure you. It's a very positive kind of pressure because you are in a community that thinks along the same lines. And if you're doing what you're doing and then you're enjoying what you're doing, then you do it even more. let us understand this crisis. I mean, it's not exactly unprecedented. People were worried about this. Oh, minus 41%. Well, market has recovered a bit. We're now minus 20. We've recovered half of what we lost. But from the top of 2018, we're still down 30 plus percent. We're still down 34 plus percent. So it's still very worrisome, right? Unprecedented? Not exactly. If I'm gonna show you what happened in 2008, that was minus 51% and we recovered in less than 2 years. If I show you 1997, we dropped by 65, then another 6% when we elected KA-RFF, and we recovered in what, 10 years? Before that, this looks very small, but because the market is not yet that big, that's a 58% drop. That's close to a 60% drop, where we recovered in 2 years. So if you're going to look at it, what are the differences? 1989 to 1990 is focused on the Philippines. We have a problem because we have a weak economy. We just came from a revolution. And guess what? All the coup attempts. So it's political instability. Focus locally on the Philippines. Other countries were doing well. It was just us with a problem. We also have economic issues like structural reforms that were not well in place. 97 was a bigger one. It was regional. It's not just the Philippines, it's regional. And because we were weak, we have banks that are weak, risk management protocols that weren't followed, real estate where people bought and flipped. That was a big issue. Today, people didn't buy to flip. Well, there are maybe people who lost jobs who might not be able to pay for their real estate purchases. They did not do this to flip. So we won't probably see the kind of, plunging prices that we've seen in 97. However, in 2008, it was a global crisis, but the epicenter was the US and Europe, then the Middle East. We were a lot better. Guess why? Because we learned the lesson from 1997. Even if AIG, even if big banks in the US crumbled, the Philippines had better capitalized banks. It has a better risk management structure. We had the reforms that we did not have in 97. But we still got hit, but the recovery was a lot faster. Why? Because it's not like today. Today, it's the real focus on the economy. Ground zero, small, micro, and medium-scale enterprises, which make up over 90% of our businesses. See, way back in 2008 and 1997, the banks were hit, big companies were hit. But Manong and Ate were still selling banana Q. They were still opening up their Jolly Jeeps. They were going to the offices selling their wares. Today, no one's doing that. We are getting hit at the very, very prime core level of the economy. It's almost like everything's put to a halt. There are recessions that can go into depression. The consumer and financial impact is unprecedented. There is unemployment, OFWs losing jobs and coming back home. All the risk assets are hit. Travel and tourism almost zero. And, probably another bad development would be oil. You see, this is tough. As people know, it's a much harder hit than what we know. Okay? It's something that can be focused on the very foundation and base of the economy. So, these prolonged lockdowns can get us into a longer and deeper recession. And that's the reason why we need to ease out these quarantine restrictions. And if you notice it, little by little, we're doing that. But the focus has to be to end that underemployment and lower and check out lower aggregate consumption and increase consumption. And how do we do that? The focus would be on a stimulus. And I think I'm happy that, they've actually passed Bayanihan 2. And on top of passing Bayanihan 2, they were also able to pass the budget. And crossing our fingers, we don't have a reenacted budget by the end of the year. That's crucial for us because the reenacted budget will not have a COVID pandemic package to go with it. And lastly, it's really the government's thrust to push up business. Because at the tail end of this, if businesses don't recover, then the government will also have to suffer from lower taxes in the future. Lower than expected economic recovery, which can take longer. So the key, ladies and gentlemen, is to get things down and to buckle in the brass tacks. And I think our finance side, our economic team is actually doing pretty well. Now, again, very spotty on the health side. I would probably agree with you that wasn't managed pretty well. But on the finance and economic side, I think people would have done things really better. Look at what has transpired. Look at why people are really worried, why we don't have the confidence. Second quarter, minus 16.5%. 25 of the 30 companies in the stock exchange lost over last year. Not lost money, contracted profits. Some of them, a few, really lost or maybe went into a negative result in terms of operation, but some are profitable. It's just that they're not as profitable as last year. So technically, the market considers them in the red. If you did not grow based on your earnings in 2019, you're going to be a red here. But look at it. There are still 5 companies that would have done better, right? But 25 out of the 30 are not doing well. But there are silver tents. You look at this. This is a report of Metro Pacific. Look at the average daily traffic. Look at NLEX. Look at SCTEX. Look at the Cavite Expressway. Red is this year. Blue is last year. And I'll tell you, that is June. Today, we're at parity or even better than 2019. Energy sales approximating 2019. Water actually breached 2019. Okay? So if you're going to be looking at what we can see, the thing is this. The thing is that we can actually expect a little recovery as we go along, even at GCQ. Even at GCQ. So let me tell you that these silver linings will work. However, for those of you who are very happy with your time deposits, things are going to get worse. Rates are going to be lower for longer. This is what's it's a government thing. Government will be using interest rates to spur up the economy. So it can do 2 things. Number 1, it can help the banks because bonds are going to be good. Rates are going to go lower. They can get premiums out of positions they've made. They can generate margins. They will earn from it. But how about the people who only go to the bank and put a time deposit? They're going to be hitting, 2 problems there. 1, lower interest, and I guess you feel that right now. You probably earn 3 times more of the cash flow 2-3 years ago than today. 1/3 of your cash flow, and guess what? Your deposit will lose value because the purchasing power of money continues to contract because we still have inflation. So if you're not going to be doing something about portfolioing the time deposits that you have or maybe deploying them to better earning propositions, that double whammy will be able to hit you and make your base contract. So where do we stand? What do you feel about the Philippine economy? Now, I go on to my second poll. How many of you think the economy of the Philippines was better in 97? Or some of you might think, it was better in 2009 or it's 2020. So the Philippines has the strongest economy in what year? 97, 2009, 2020. Okay? Please answer it. We'll give you 30 seconds. Yung mga sasagot ng 1997, hindi nakikinig. Okay, Eric, what are the results? Let's see the results, Eric. Wow. Huh? People really thought 1997 we have a stronger economy? Or 2009? Okay. Kaya pala wala kayong confidence ha? O medyo, dadaanan natin. This is a factual discussion. It's now a factual discussion. It is based on information, and I'd want you guys to listen through, because if we have a problem in investment confidence, it's because of the way you think. Look at where we stand. This is a list of 66 countries within the emerging markets. In terms of measures between public debt, foreign debt, cost of borrowing, and reserve cover, where are we ranked? We're ranked number 6 out of 66 emerging markets. This is done by The Economist. Can you imagine that? Number 6 of 66 countries. People who answered 2009. Look at this. In 2009, our rating was BB minus. Today, it's triple B plus. One more notch, we're gonna be having an A in that grade. Per capita income, from 5,274, we're almost 8,000 now. Now, this is the focus I'd want you to have. Gross international reserves. With 44 billion in 2009, we have over 100 billion now. What are the two problems you always think of in a crisis? What are the two problems that hit us? Number one, interest rates. They skyrocket. That was bad in 1997. And what's the other thing that hit both 97 and 2009? Exchange rate. In any given day, the exchange rate lost 15 to 20%. Those two things hammered a lot of investors. Today, are you even looking at the exchange rate? Just imagine how strong it is. In fact, the government has to go the other way around. It is to protect the dollar. Can you imagine? Protect the dollar. That's not exactly good, okay? That also means that our imports are down and the economy is down because we're not using the dollars to bring in goods. However, the reserves are also good because it can protect the peso. Second, interest rates. Rates are lower. Can you imagine? It's a crisis. And how much are you getting from the bank? 1% or even less. For some of you, it's already microscopic interest rates. Look at these charts. If things are better in 97, look at 97. Look at 2009. Look at where we are. External debt to GDP, public debt to GDP. I agree. It is blip. It has gone a little higher. But it's still way, way off from the numbers in 97 and 2009. Even in gross non-performing loans. While I agree that can snap up a bit, but it will never be approximating the 10+% we experienced in 97 and maybe the 8+% they experienced in 2008. Look at the gross international reserves. Record highs, ladies and gentlemen. And what goes with that? As I've said, low interest rates, strong currency. How about public sector responses? Our companies are good. They've done pretty well. Jollibee, centerpiece of the problem, right? Almost closed. Who's going to go to Jollibee? What did Jollibee do? On top of Food Panda and Grab Food right now, you now have an app of Jollibee. Aren't they exactly competing with, all of these online stores? No. They just want all the options for you. But it's not even in the platform that I'm amazed. You know what amazes me? Frozen Chicken Joy. How's that for a product? In 2019, have you ever thought about buying Frozen Chicken Joy? And in 2021, when the market opens up, you think they're still gonna have that on the menu? Of course. So when you buy Frozen Chicken Joy, the gas is yours, the cooking is yours, the oil is yours. Guess what their margins will be? Much, much higher than you ever dream of. And that's the reason why you see Jollibee moving today. As the confidence level goes up, it shoots up. Look at the demographic variable. We're a young population. We have a sweet spot, 24 average age, 23 median age. And while people think oil is a problem, we're a net oil user. We're not even a producer. So that's going to be a problem of the Middle East. We have a great position because we're a net user. So when oil, which is a factor of production, goes cheaper, then it goes better for us. As we speak, ladies and gentlemen, there are companies, factories that are being set up in Tarlac, in Bataan, in Pampanga. There are companies that are going and moving, expanding out of China to balance off the risk. And you know where they're going? Vietnam, Indonesia, and the Philippines. We're at the tail end. Okay? Vietnam leads, Indonesia second, we're the least. But it's still a plus because we're still an option. Sayang lang because we could have done better, right? But you see, even as we're number 3, those factories, those industries will get jobs going. And as this economy recovers, we're going to be going great guns in industrial parks in those areas. So real estate is actually going higher in those places. How about the global stimulus packages? Unlimited, infinite. The US is doing it, Australia is doing it, New Zealand's doing it, Canada's doing it, the UK is doing it. What will be the factors that will lead to faster recovery? Obviously, easing of the quarantine. We're still in GCQ, but guess what they're doing? They're continuing to ease things. I know hotels are now open. Restaurants are now doing more than, 50%. And in some cases, if they have, outdoor seating, they can even go as far as 100%. A certain impact on earnings for our listed companies, stimulus packages. I really like to see Bayanihan 2 get implemented to be backed up by the budget that's going to get approved by the Senate and the House. When that happens, then the small businesses can now be churning. And lastly, obviously, that's the monkey wrench, the vaccine availability. If the vaccine suddenly becomes available, you will see this market shoot up. And I can tell you, the market's already shooting up without the vaccine. Ladies and gentlemen, that's the reason why I tell a lot of people, dollar cost averaging, peso cost averaging, that's the best. Because you know why? If you're going to time the market, you're not going to be catching movements the way fund managers do. So the question, is it a good time to invest? Or should we wait? See, we never control the weather. I always tell a lot of people we control our ship. Volatility is our friend if we know what we're doing. What are we considering anyway? When you invest, you consider your goals, your portfolio, your time horizon, your risk appetite. There's nothing there that says economy, crisis, growth. Nothing like that. All of these considerations are what? They are internal to the investor. So the rule of investing shows you that what you need to consider are factors within you. So if you have emergency funds, if you have put yourself in a situation where your portfolio is structured to weather the storm, every day is a good day to deploy funds. Every day is a good day to make investments. That's the way it should be. Because history always repeats itself. History repeats itself for people who never learn. People who never, ever looked at the lessons of the past. So, if you're going to be a victim of history, sayang naman po, hindi ba? Sayang naman. We have to be able to learn. As long as you have the kind of wise wealth accumulation portfolios, wise wealth accumulation pyramids, then you're going to be stable. That's why it's called a pyramid, right? It's very stable. Unfortunately, many people, they have 20,000, they have 30,000. Guess the first thing they invest on? Stock market. Direct investing ka agad. What happens when you see things like this happen? The pyramid is inverted. So it's very, very unstable. Once they have an emergency, once they need money, what do? They sell positions of loss. They sell losing propositions. But if you have something like this, you can weather the storm. Because if you need something, that base will protect you. And as you move up, you will have the kind of reliability, you have the kind of resilience that you need to push forward for growth. Because not all is bad. Look at this. This is the PSEi, the line at the bottom, and you see the lines on top of it. Many people will wonder, oh, those 4 lines are doing better. Ano yan, Rex? Is that the US? Is that Singapore? Is that, what market is that? Those are not markets. Those are still stocks that are in the Philippines. They call the essentials. If you were able to position on Globe, on PLDT, on Pure Gold, on Century, tuna, you're going to be performing that. And that's the reason why I tell a lot of people, at times, I don't want to manage it myself. I'd rather just give it to a fund manager because this is their job and this is something they need to do on a consistent basis. Even I, with all of the experience I have in managing my funds, yes, I still do, but a big proportion of my money is now also positioned with professional fund managers so that I know how I do. I know how I compare myself to them. I know if I'm doing better. And certainly, since I do what I do and I love what I do other than trading, I'd rather give them the responsibility. So we share part of the load, right? So this would be your essentials, defensives, and non-essentials. So look at that. Brother Edward Lee of Call Financial shared this with me. He says, if you're going to be focusing on the essentials, Rex, they're already earning more than last year, or at the very least, approximately earning what they earned 2019. The defensives would be where the disparity is, and obviously the non-essentials is where the big, look at that, look at Jollibee, from 2019, 25 to minus 12 in 2020. But when the tide turns, guess what happens? The non-essentials will claw back, and they will claw back really fast. And look at what happened this week. We're just looking at 3 days, ladies and gentlemen. Friends, 3 days, 6.5% up yung market. Okay? So if you made a time deposit at less than 1%, it will take you 6 years to recover what the market has earned for the last 3 days. Can you imagine that? And that's the reason why I don't want to watch it anymore. I am just going to be deploying. I'm just going to be investing. My job is to allocate and deploy investments. My job is not to watch them all the time. And this is why I like this session today. Because this session today is one of the timeliest we've ever had. It's almost like we scheduled it at the right moment. Since last night, I didn't sleep that much. Up till early this morning, tons and tons of research went to me. I did my own and, doing all of these wedge analysis, candlesticks, and all of that on the technicals. Because I've been watching this market for the longest time, and I've been watching it with friends like Marvin Germo, other even international fund managers from Hong Kong and Singapore. And what were we saying? That the Philippines would be in what we call a wedge pattern. Higher lows, but lower highs. It will get to a head where the market will decide where it has to go. And guess what? Many people think it's going to go lower because GCQ is basically going to be extended till the end of the year, and people want GCQ to end. Guess what happened? Look at that kind of breakout. That kind of breakout takes off from the pattern that has been there in the last 4 to 5 months. And that's a pretty strong breakout. All it says is many of us will have to take a decision, make a decision to take an opportunity today. Or else, if we are going to be waiting for long, then eventually we're going to be buying investments, placing them at prices pre-pandemic. And that's going to be sad, right? It's almost like you went through the pandemic and you never had an opportunity. I compare it to the people, my friends that talked to me in 2012, 2013, and the dialogue was this way. You know what? I really felt so bad because I could have invested in 2008. If I invested in 2008, then I could have doubled my money by now. How come we always talk in hindsight? That crisis, that same opportunity is given to you today. And I'll tell you this, By 2024 and 2025, some of you are going to be saying the same things. I should have invested in 2020. In fact, some of us can even say that now. Can you imagine? Ayala Land traded at below 20 pesos. This morning, Ayala Land was over 31. You would have made what? Over 50% already. Is it too late? Remember, Ayala Land went to almost 50 before the pandemic. So, think to yourself, why am I not acting on it? It's because of your emotions. Your emotions would be a roller coaster ride. From optimism to optimism, there would be euphoria, there would be disdain and despondency and capitulation. And you will act based on the way you feel, and that's really going to be the bad side. Take the emotion out of investing. Make it systematic, make it objective. How do you do that? By allocating your money. Asset allocation is probably one of the most underrated activities in the field of investing. Underrated. Why? Because people always focus on asset selection, investment instrument selection. But it has to be asset allocation. Asset allocation actually brings forth the bigger sense of profit. By subdividing it, it brings forth the real gain. Much of long-term portfolio performance is not due to investment instrument selection. It's due to asset allocation. Okay? My last poll is this. How much of your investment portfolio is in these particular instruments? Bank time deposits, stocks and bonds, mutual funds, real estate. Answer the biggest part of your investment portfolio today. Answer that, and we will see if you're typical. In your investment portfolio, which is the biggest amongst these four in terms of allocation? And in a little while, Eric will give us the answer. Eric will give us how you guys answer this. Wow! Mutual fund, 77. Looks like we're preaching to the choir here, friends. There's still bank and time deposits. Wow. Real estate, only 7%. You know, I'm really so happy that the answers are like this. But we'll just have to do it even more. You just have to do it even more. Because, you know, quite frankly, my real concern is this. My real concern was, when I make people answer that question, you know, my real concern? That they don't know how to answer it. Aren't we like that? We just accumulate investments. We don't even know which is the biggest slice of our pie. We just accumulate without understanding this in terms of, you know, allocation. Ladies and gentlemen, if you don't have anything to do tonight, tomorrow, or even the weekend, maybe you should be doing this. Maybe you should look at how to analyze your portfolio, how much of which is dominating that basket. What are you doing in terms of percentage, and how are you doing when it comes to yield? At the very least, you know your position and you know where you stand. This is a rule of thumb. If you don't have businesses, if you don't have real estate, then you divide it between 25% stocks, bonds, mutual funds, UITFs, and savings and time deposits and insurance. So this is but a rule of thumb. I'm not going to say it's the end all and be all of it, but as you're starting, at the very least, there has to be what we call a balancing act. What we want to drive is goals-based asset allocation. Goals-based asset allocation. You know, I tell a lot of people, mutual funds would probably give you, on a long-term horizon, 8 to 12%. Do you know that you don't need to earn higher than that to really fulfill your financial dreams? Education for your kids, a house, a reward for your family, your dream vacation, a very good retirement for your twilight years. You don't need to earn over 8%. What you need to have is a constant disciplined build-up on your contributions and earnings. And hopefully, tax efficient. So that when you get to that point, you're going to be able to realize your dreams. Many people go for 15, 20% return. And that's the reason why they throw risk out the window. That is the problem. Don't throw risk out the window. Focus not on earning much, but focus on programming your build-up. Focus on your goals. Invest with the objective of, achieving those life goals. You don't have to outperform the market. You don't have to get into what we call the negative behavioral biases, because risk is an issue. Risk is an issue. So get into strategic investing, where the key is to understand how everything goes together. There is such a thing as an efficient frontier. What is the efficient frontier? The lowering of overall risk and earning the highest possible amount within that low risk level. And you know what? The only thing that does that is discipline. The only thing that does that is not panicking, not reacting emotionally, and just continuing the journey. The key is diversification, but on top of basically passive diversification, it's active asset allocation. And Rampver Financials is here. We'd like to be able to be part of your journey. So if you're going to be looking at total net worth, all of these things have to go together. Fixed income investments, we need that for your emergency funds. We don't want emergency funds to be in mutual funds. A portion of it may be for money market and bond funds. But real growth will have to be outside the realm of fixed income. But fixed income will have to be the positioning for your convenience accounts. Okay? Then we go equity investments, we go real estate, life insurance, all of that, balancing growth and risk, making sure that the tax leakage is the least. Can you imagine? You put money in the bank, you're not even earning as much as a bond fund or a money market fund. But the bond fund and a money market fund would be tax-free, and your time deposit has 20% tax. How's that for a double whammy? Maybe you should decide, right? You should decide differently. Imelda shared with you different FAMI funds. So you will see how you can access liquidity and make sure that there is a higher and worthier level of distribution. Ladies and gentlemen, it is when the night is darkest that the stars shine brightest. If I'm going to be using this as a metaphor for the way I do my investments, this is it. I earn a lot more during the darkest of times. That has been true for me in all of the crises that I've been part of. That kind of agents me, right? That kind of reveals to you my age, because every decade, there's something like this that happens. And if I'm going to be looking at my past, I have earned the most during situations like this. Funny, because I kind of come up with, I do come up with a joke that shares it in a very light way, and it says, this, I sometimes take advantage of the misery of others. While there are people who linger in pain because of what they experience in their portfolios, I take advantage of it and earn more out of that particular position. We have shared this many times. We have a YouTube channel. You can find insights for markets, product recommendations, personal finance tips, even growth and life development advice is there. All you need to do is watch. Imelda said this, di ba? Netflix. See, that's the point. We are in a pandemic. Are we growing? We have the time. We don't have traffic. We stay home. We have extra time. Are you basically entertaining yourself, or are you learning from the time that you also get to entertain yourself? I can tell you some of these videos are entertaining too, but at the very least, you learn something from it. And I'll tell you, if you want to earn in the future, you have to learn first. This is something that I hold very close to my heart. You know, prosperity begins in the mind before it goes to your pocket. Let me repeat that. Prosperity begins in the mind before it goes to your pocket. So if you think that in your free time, Netflix is the best option, think twice. Sometimes, Rexflix is a better option. Rexflix po paminsan-minsan para naman may natututunan tayo. So, if you haven't, please check this QR code. Pag binaril nyo yan and i-scan nyo yan, diretso na kayo sa subscription nyo sa YouTube page namin. And then there, it's almost like, a wealth of information. From the simple steps to wealth creation, to fundamental analysis, a gold lecture series, even some things to do to combat depression. Ang dami pong topics. So you can learn a lot. This is always my last message. Every time I say this, I always have a great sense of fulfillment as I shared many things with many people. I always tell everyone, and I can tell you, my friends, always anchor everything on what truly matters. Always anchor everything on what truly matters. And if you do so, you're not going to be wanting for motivation. You're not going to be wanting for inspiration. You're always going to be doing the right things. Because what you're doing would be not for yourself, but for the people you love, for the people who matter to you. In fact, you can even rephrase this by saying, always anchor everything on who truly matters. And it doesn't have to stop with the faces in your family. You can have other loved ones, your company, your friends. Because at a time like this, we have to be a contributor. And if you're contributing to all the other people, guess what? You will feel more abundant. When you give and become generous today, and you know this for a fact, we can never outgive God. So if you give and you're grateful at this time, guess what? You're going to be blessed with more abundance because money and wealth just flows through you. I hope, ladies and gentlemen, this has been a learning experience for many of you. I want to see you in our YouTube channel as a subscriber, and make sure you hit that bell button so that we can notify you, and like the videos so that at the very least you can help our channel as well. Thank you so much for being with us, and good evening.